So I stand here today just to talk a little bit about my business, and it's from two perspectives actually. One is that I have to deal with our shareholders, L&G shareholders. So I'm going to reflect a little bit on the questions that I get asked about our organisation from an ESG perspective. I'm also going to talk about some of the great work that's done by Sasha Sedan, who is our head of corporate governance, whose team get involved in that responsibility of looking at ESG performance of companies that we invest in. And I'm also going to very quickly touch on what we think the new boundary of ESG is going to be, which is your balance sheet. As an organisation, how is ESG applied to your own funds, your shareholder funds, your own balance sheets? Because there's some very, very smart NGOs and consumer groups out there that can very quickly work out where you've got your corporate money invested. I'm just going to share a few of those along the way. This one? There we go. So our responsibility. So there's our CEO, Nigel Wilson, with his hard hat on a regen project in the UK. We are responsible, and I use that term deliberately, we are responsible for €1 trillion worth of assets globally on behalf of our clients. We are responsible for 10 million retail customers' lives. And we are responsible for a balance sheet of around 70 billion. And we have a commitment to fund direct investments from our balance sheet into infrastructure, of which we've deployed 7 billion of the 15 billion commitment. And all of those commitments are public. We are one of the very few financial institutions that has a direct investment target that is available publicly to say this is where we will invest our underlying balance sheet. We are one of the few asset managers that for the next 12 to 24 months ahead says we will engage companies as an asset manager on behalf of our customers on both a quantitative and a qualitative measure. So we will talk about how many companies we will engage for the next 12 to 24 months. And we will talk about the issues that we are going to focus on as an asset manager. And there are very few asset managers that do that. Give a 12 to 24 month view on what they're going to govern and where they're going to govern. So I'm going to talk about it from that perspective. Fundamentally, what does ESG mean as an investor? It's about having a meaningful conversation. And I think this translates, I love the term critical friend. Investors are critical friends of the companies in which they've invested. They are there for the long term. They are that friend. If you're performing well as a business on ESG, one of the investors' roles is to say, well done, please carry on. But also you're there to be critical, to spot the things that maybe that they haven't spotted about how their business is operating. And critical friend is a really simple way of looking at that dual role that investors have to take for the long term of their organisation. And there were lots of debates about what's your investment strategy? So should you influence through ownership? Should you hold shares in an organisation and then influence it? Or actually influence through exclusion, sell out of that company because actually you don't believe in what they're doing? From L&G's position, we have an influence through ownership strategy. A lot of our funds are index. They are passive funds. And I hate to use the term passive because we are not passive. We own those funds on behalf of our clients. And we engage. Last year, we did not abstain from one single vote on the stocks that we hold, and we publish a yearly report on who we've intervened in and why and what the change was in the organisation. So if you have money with an asset manager, you should be demanding what are your future-looking targets, what are your campaigning areas, what are you going to change on my behalf as a shareholder, as an investee in your organisation. The other thing I wanted to do was just reflect a little bit on what we are seeing in consumers' minds around the world. We are seeing what we are calling barcode consumerism. Today in London, there is a meeting with a number of investors and NGOs on good boardroom effectiveness. It's being run by an organisation called the Responsible 100. It's a pretty unique event. Responsible 100 aim to get to the point where on your iPhone or other device, you will be able to scan a product or service in the future and understand how that product or service is really made. So not where it's sourced, as in consumer goods, but actually, what's the company's tax policy? What's the company's corporate governance policy? How does this company vote? So ultimately, these organisations are pushing to provide total transparency to consumers. If you buy a financial service and you scan that barcode on your life insurance in the future, how is that product really made? How is it governed? What's the remuneration policy of that company? How does it pay tax? Where does it pay tax? Barcode consumerism is coming because of some really smart work by a number of NGOs. I'd encourage you to have a look at it. The other thing I call is the Bloomberg effect. We're seeing some really interesting work from people like the Fair Insurance Guide and Open Corporates, who are working very hard to look at transparency of company structures and also where balance sheets are invested in financial institutions. Really interesting stuff in Holland. They're using Bloomberg terminals to send to financial institutions. This is where we think you've got your underlying balance sheet invested. Now, actually, as a company, you've got a choice to make. You can either let them get on with it and tell you where you've got your money invested, or you can actually say, do you know what, we're going to put our balance sheet into somewhere far more socially, economically useful. And a decision we've made at L&G is to commit 15 billion of balance sheet into socially, economically useful projects for the next 20, 30, 40 years as a business. So we're seeing that. The other things we're seeing is a real plethora of real-time monitoring on company performance. If you look at SigWatch, RepRisk, these are real-time monitoring tools by NGOs on organisational performance. And this data is feeding into investment systems now. We use this data to monitor our own balance sheet investments now. Because what NGOs are very good at is understanding where there are pressure points or potential pressure points for companies. So this information is out there. As a company, you have a choice. As a consumer, you have a choice about how you find out about companies. The model we really love, which we're very close to adopting, is the one of Triodos Bank. Your ability as a consumer to take a savings account with them and for them to then publish where the balance sheet, where they've invested the money to, is a great lesson for financial institutions. It reduces the gap between money in and money out. So we are just about, fingers crossed, to publish our balance sheet investment to our customers, to our shareholders, to say, type your postcode in and you will find out where L&G has a physical asset near you. And it's a great way for financial services to fundamentally show how a promise to pay, a service industry, invests in physical assets near where our customers live and work. So there's quite a lot to learn from this. The only thing I would say that we have found is where there have been a number of corporate crises over the past number of years, when you go back and look at where NGO chatter and sentiment was at that time, it wasn't about the issues that broke. If you look at things like LIBOR or Deepwater Horizon or emissions, that wasn't where NGOs were campaigning for. So you just have to be slightly careful. They're leading indicators. And the big debate at the moment that we're seeing as an investor is about culture. How do companies prove their culture as a business to their shareholders, to their employees? Proving culture is currently the big debate between investors and companies. And fundamentally, it's about three things. What's your purpose as an organisation? What's the strategy? What are the behavioral boundaries in your organisations? And show me the data that proves that's working. And fundamentally, for services businesses in particular, proving culture is really, really important to show the long-term health of that business. So there's a few things we can learn from the consumer space. I've very briefly mentioned we are one of the few asset managers that says, here's our forward-looking engagement targets. So in 2015, we said we would engage over 500 organisations as an asset manager on ESG performance. Okay? And we delivered 545 meetings with companies globally. In Europe, so 45% of them with non-UK companies. In Europe, with 65% of the companies we engage, we voted against at least one resolution that company put forward. So being a passive manager actually is completely the wrong term. We act on the responsibility of that money. The other thing we do is we lay out, these are the areas that we are going to campaign on. And I use that term deliberately. we should be learning from NGOs. NGOs are brilliant at campaigning. Investors are brilliant at campaigning. When NGOs are involved or other organisations are involved to help round out their knowledge of an organisation. So if I were investing money, and as a consumer, probably a bit more enlightened than the average consumer, but as a consumer, I want to know, if I give you my money as a financial institution, who are you going to influence on my behalf? And I'd be looking for the asset managers, frankly, that have a plan, a target for the next 12 to 24 months on the areas that they think need improvement in the outside world. The other thing that we found really works is you need to tell people as a financial institution what you stand for. You really, really do. The ability of social media and to put your opinions out and your beliefs out is really important. And it's linked to the proof of culture. So these are just some examples. We have views. We have views on actually quarterly reporting is not something that's very useful to the financial markets. We have views on what's needed around the housing market. We have views on what clean energy is needed and what forms of clean energy are needed. And that's both with our own balance sheet and as an investor. But how can we help consumers understand unless we're opinionated about the things that matter to our organisation and the things that matter to society and the economy? So any financial institution can do this, but actually you need to be more opinionated as a company on the issues that matter to your customers and to consumers. The other thing I just wanted to very briefly touch on, if I may, without taking up too much time, thank you, is we are applying ESG principles to our balance sheet. So one of the responsibilities I have is I sit on the transaction committee, and that's where L&G's own balance sheet is discussed about which assets we will back for the long term. So right now, of the 7 billion we've invested so far, it's housing, health, energy, business infrastructure. ESG is in the middle of that. When we look at that transaction, we look at actually what are the risks and opportunities around investing in this sector of the economy. And any company does that. It typically sits in Treasury, but actually it's much wider debate than just the traditional Treasury team debates. The other thing is when we take a stake as a shareholder in a company, so we own a house builder, one of the things L&G has set out to do is we need to get more houses built. So we took a stake in Cala Homes. There's 2 shareholders in Cala Homes. Because of our ownership of that business, we took their board through a materiality process, which they wouldn't have done without our influence. They produced their first sustainability report disclosure. They were a private company, but we were behind them. It's really important we influence those balance sheet assets. And we brought in critical friends to understand, into their board process, to understand about planning, land, environmental issues, because we stewarded that asset. Pemberton Asset Management, we set up an ethics committee. That's a business providing loans to European SMEs. We set up an ethics committee to look at where would and wouldn't they want to put loans on our behalf with our capital. And the other thing we've done is we put money into social investment sector. And we're looking at the concept of social leases as opposed to green leases. So if we put money into elder care providers, actually, how are they, and we're putting money in for the long term, 30 to 50 years, how are they improving the lives of their residents over the long term? When frankly, they're used to dealing with 5-year refinancing deals from investment banks. So in exchange for us influencing our governance, we will overlay our ESG expectations onto the assets that we own on our behalf. We are really proud as an organisation. We publish the ESG targets that we will go after for the next 2, 3, 4 years as an organisation. And they cover both how we deploy our balance sheet, they cover how we will intervene in other companies on our customers and shareholders' behalf. Any financial institution should be going down this path in our opinion. And thank you very much for listening.